A good close in week's performance for notably silver and also gold. I know what naysayers are thinking. 14 years of being dead money? Big whoop. Well, that was 14 years to acquire bullion tonnage at silly low price points and relative valuation levels versus many bubble market price high alternatives. If buying low and owning assets on the rise is the game, grizzled bullion stackers are doing just fine. This building worldwide precious metals bull market is still early to middle innings depending on the timeline you use to define it. S&P 500 stocks in the USA are still nominally priced to delusion. Gold could again outperform them by a factor of 8 times here to later mania phase lows in the 2030s, for instance. The silver side of this coming wealth transfer is even more pronounced, with potential of outperformance around a factor of 16 looking out towards next decade. Well, shout out to the silver squeezers out there buying bullion in solidarity on this final trading day of the month, August 2025. Of course, the shorts wouldn't let the monthly silver candle finish above the round 40 an ounce figure so as not to attract too many levered momentum trader flows that constantly are looking at monthly charts. Better, slower, and steady anyways. Legit stackers know the fundamentals and are quietly training in the dark, waiting for the inevitable moves over 50 an ounce, with increasing normies wondering where you got your buff bullion body from. Interestingly, this week the United States has finally come clean for the first time, acknowledging the fact that silver is a nationally critical metal, one we'd be back in the Stone Ages without. You like your electronics, you like your solar panels, or what, 1,000 of other things we have to have silver for in our modern world? Well, the silver supply is not keeping up with ongoing silver demand. And this now 5-year running silver market deficit trend is likely only going to get wider in the foreseeable future. Internally, in the United States, we use about 5 times more silver than we mine. And the only way you will likely get much of the longer-term silver bullion stashes out of domestic U.S. citizenry stashes is to see the silver spot price multiply by many-fold in the future. The Saudi Arabian Central Bank, or Sovereign Wealth Fund, recently dipped a toe into the silver derivatives and associated silver miner index to the tune of around $40 million outlay. That's something, but we're talking about a fund that has over $500 billion in net assets under management, so less than 1% allocation to silver proxies for now. The Vietnamese gold market has ended the state monopoly on gold imports and exports and the production of bullion products, which is good news for local stackers looking to buy lower margin gold bullion over high-grade gold jewelry. Dear Vietnamese stackers, look at the gold chart on the left versus the silver cup form chart on the right. Silver in fiat dong terms has to double from here simply to match what gold has already done. Find and buy some silver bullion, in other words, for the long haul. Fiat M2 US dollar accounts onshore are blowing up to record highs yet again. The currency creators are hard at work debasing the circulating dominant reserve currency. But for many emerging markets, they continue to buy bullion over bonds as displayed by this excellent chart. Foreign central banks now own more in gold bullion than in U.S. bonds. Now, I expect the yellow line will continue forming a U-shape in the coming decade as the blue line rolls over back towards 10% and possibly lower as the ongoing bullion over bonds trade marches onwards. For those emerging markets that bought gold bullion over U.S. treasuries, it's been an excellent trade since the COVID 2020 levels. It's hard to see these trends changing much given the underlying market fundamentals. Scottsdale Mint's Josh Fair put it succinctly, quote, "Imagine creating paper/digital money out of thin air and using some to auto-buy gold. There are many central banks doing this monthly, quarterly as they raise percentage backing of gold. Most in finance aren't understanding this driver. Higher." And the yellow portion of this chart just simply is moving wider as the years are going to come, as gold outperforms every fiat currency as it has done since time immemorial. We'll stick around on the other side of this break. We will look at the recent report by Metals Focus and Silver Institute regarding the most volatile demand factor for the coming silver bullion bull market mania phase, as we look specifically at the 4 largest silver investment demand markets and consider trends to come. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates. And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway. The spot silver and gold markets moved higher on the week, platinum also closed at 11-year monthly high levels. The spot silver price finished at $39.68 an ounce bid, and the spot gold price ended at $3,449 an ounce bid. The spot gold silver ratio fell to a still historically high level of 86. As mentioned, the Silver Institute and Metals Focus Report on major silver investment demand markets this week has data that often spans over 15-year time frames since before spot price silver last touched 40 an ounce. They wrote, quote, "Physical investment is a structurally important part of global silver demand and the most volatile. Notably, over the past 15 years, physical silver investment has ranged between a low of 157.2 million ounces in 2017 and a record high of 337.6 million ounces established in 2022. With growing geopolitical tensions, rising government debt, and an increasing investor perception that silver is undervalued compared to gold, the silver price has experienced a 34% year-to-date increase." Going to a deeper dive here on four major silver investment demand markets: the USA, India, Germany, and Australia. You can see the swings over the past 15 years have been just under 150 million to over 250 million ounces in global silver investment demand in a market of just over 1 billion ounces in global demand. The analyst team at Metals Focus points out that within the largest silver investment demand market, the USA, the largest potential for investment demand growth is perhaps the often poorly serviced bullion IRA sector. Now, I could literally create a YouTube channel simply focused on the myriad buffoonery and unscrupulous sales tactics many boiler room coin dealers use to often steal more than half or more of average U.S. investors' IRAs by selling them overpriced, odd-weight silver and gold coins. Just turn on your local favorite conservative talking head, and high chance they are selling their flock to the poorhouse by suggesting some Glenn Beck-like used car salesman shop to buy your gold or silver IRA at. It's specifically why founder Tyler Wall of SD Bullion decided to buy a gigantic, secure bonded warehouse with high-level vaulting so as to offer bullion storage and bullion IRA servicing for the customer base. Now, I've seen it firsthand, very professional. I've also used it. I have also seen other major IRA depositories in this industry, and while I will not name names, I would run away from almost any and all I have ever seen in person. I literally have people in my close circles now looking to get their IRAs into bullion, silver and gold low-margin bullion owned outright, that is. The last thing I want to see is for any close contacts or any of you out there to get greatly taken. Of course, I am sending them to sdbullion.com/IRA. Traditional and Roth IRAs owned outright for your retirement make complete common sense, and SD Bullion has streamlined the process. Back to the ongoing silver bullion investment demand picture globally, it is silver's ability to outperform gold and the fact that gold is beginning to not only seem so highly priced that it's one of the reasons why we will likely see many would-be gold bullion buyers move over towards silver in the coming decade. Look around the world. Silver is still historically cheap in most of the major fiat currency markets, whereas gold has already taken off and running higher. Gold leads, silver follows. In the USA, over the past few years, some secondary products have come back into the domestic market, reducing the need for freshly struck brand new coins and bars as secondary or gently used product inflows have compressed margins and built up dealer inventories. Of course, much of that silver sold is often going to refiners to help meet ongoing silver market deficits as well. Looking at the second largest silver investment demand market with India, where the local silver rupee price has busted out of its silver cup formation and is now racing to outperform gold, India is basically about 80% of Asian silver investment demand and about 1/4 of world demand. Average retail premiums for small silver bullion coins in India are ridiculously high, and therefore the local Indian market is mainly dominated by silver bullion bar demand. 31.1 grams is about 1 troy ounce for reference here. SD Bullion just had a sale of American Silver Eagle coins at spot plus $2.99 an ounce. That's basically spot plus 7.5% for reference. Indian silver bullion bar demand over silver investment coin demand can range as high as a factor of double to quadruple in total ounces sold to local investors. The vast majority of Indian silver bullion bar buyers are getting tinier bars, weighing from 1.5 to just over 3 troy ounce size. Looking over to the third largest silver investment demand market of Germany, a nation who 3 or 4 generations ago suffered a brutal hyperinflation, It looks like silver in local fiat euro terms neared or possibly hit its all-time nominal price high today. Let's check the closing spot price in fiat euros, and yes, all-time record nominal price high. See you later, Das Hunt Brothers. The local European powers that be don't want their citizens buying silver bullion. Sweet spot plus 19% VAT tax euros. At least the Germans and other EU nations can get investment grade 999 fine gold bullion without VAT tax still, and thus Germany is dominated by gold demand. Now, if I were in the EU looking at the cup formation of silver relative to where gold has gone, I would simply just pay the plus 19% VAT, as silver can make that break even in a good year in a matter of a few good months or a couple quarters running higher. Silver locally has to go near 70 an ounce in fiat euros terms just to match what gold has already done to date. So get long silver, perhaps offshore with SD Bullion vaulting storage and sidestep VAT taxes. You don't want to miss out on higher relative silver valuations coming ahead. Turning finally to our mates down under, I didn't realize you all were such bullion bar stackers, preferring them over bullion coins based on this data. Your long-term gold versus silver and fiat Aussie dollar chart suggests the local silver price has to triple from here just to match what gold has already done to date. So Aussie, get long silver bullion bars and coins. To conclude, only a tiny percentage of the Western and Eastern world is even conscious of the burgeoning silver bull about to melt faces off. We are literally back at 2019 levels of silver investment demand, with some of the best years likely not far from now. Silver follows gold, so get long silver bullionaires out there. US viewers, have a great Labor Day holiday on this coming Monday. Get your 90% silver Morgan Peace dollars this holiday weekend. That's one of my top 3 favorite obverse designs. Get them at spot while supplies last. That will be all for this week's SD Bullion Market Update. And as always to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.